Let's talk earnings. A couple companies in two different sectors, starting with FCMB Group PLC. Audited group financials for December the 31st, 2022. Profit before tax jumping by 61% to 36.6 billion naira. There we go. Assets up by 19%. Double-digit growth across the board. Total assets 2.9 trillion. Gross revenue 283 billion. 35% climb there. Its net interest income 34% jump, and as we said, pre-tax profit 61% climb to 36.6 billion naira. Transcorp Hotels PLC, the hospitality subsidiary of Transcorp Group, 47% growth in its revenue to 31.4 billion naira. Gross profit 41% climb there. Profit after tax 172%. So let's dive in. Mayowa Ige, Senior Associate with Financial Derivatives Company Limited, joins us. Mayowa, good morning to you. Thanks for joining us. Good to see you again.
Hello, thank you.
So yeah, let's enjoy doing this with you guys. FCMB. Let's start with FCMB. What do you make of, I guess, macro view of their results performance?
Well, it's an impressive result, really, because when you see profit before tax growing 61% year on year, especially when you consider everything that happened, all the banking sector had to endure in the previous year. I think it's quite impressive, right? We saw that the gross revenue grew by about approximately 35%, and this was driven by increase in interest income and net interest income. We also saw increase in stronger consumer confidence or customer confidence, and then we saw deposit grow rather by 25%. We saw total assets grow by about 19%. But then when we also look at the operating cost, that also grew, and then this was largely due to increase in regulatory costs, inflationary pressures. Last year inflation was a major issue for companies, for countries, and then also we saw technology costs also impact the operating costs, but then we still saw the profit before tax grow. Then also when we look at the net impairment loss, that also increased about 25 billion by the end of the year, and as the last year was about 4 billion.
Yeah.
And then the cost of risk also increased to 2%, which was 1% last year, and this was also this was mostly because of their loans and advances. This was the reason for the net impairment loss. But generally, it was good. Outside of the numbers, we saw impressive ESG results in climate change, focus on agriculture, digital transformation. Generally, it was a good result.
Great stuff. What about the it's just growth for them. The business segments, if we can take a look at that, what do you make of that? I think it was double digits across the board for consumer groups. There we go. Investment banking, investment management. What do you make of that?
It's good. You see, FCMB has this thing about earnings diversification. They have been into diversifying their earnings. You also see, we saw technology costs being a part of the reason why the operational costs increased. FCMB is very invested in their technology. We've seen the sector of their business, digital wealth, lending, payment also increase. We've seen double-digit growth in those areas too. And then when we now look at consumer finance, investment banking, investment management, we saw the double-digit growth 25%, 45%, 26% across those sectors. So as at H1 results last year, we saw that banking subsidiaries contributed about 70%, while the non-banking subsidiaries contributed about approximately 30%.
Yeah.
So it's there with the earnings diversification. We're seeing the growth. We're seeing it help balance results, and then I think that they're reaping the benefits of it, really.
Energy transition, very interesting. I know if you want to discuss that, as far as them moving to renewables and trying to convert some of their branches, what do you make of this movement here as far as renewables is concerned, the energy transition?
I think first, let's look at commodities.
Yeah.
Diesel, as of January 2021, diesel was about 288 naira per litre.
Yeah.
The big January, and then by December it was 817 naira per litre. That's enough to affect the books of any company, and the banking sector was definitely affected. That's when we saw the different banks come up with load shedding, rationing. They say they close by 3, and all of that.
They're still closing early till today. All the banks,
just to manage their costs. So it's a very good cost-saving initiative by FCMB. Now they move about 75% of their branches to energy, to solar energy, renewable energy. So that's helping their costs as it is. And so it's actually a good cost-saving initiative. Barring the initial capex, the capital expenditure, there's a long-term benefit to it. Energy, renewable energy, solar energy, anything, the costs are fixed. So it reduces the volatility that's involved with other sources such as oil, diesel, and the likes.
So I guess, I mean, if you're talking about any company, regardless of the sector, this is a move that you probably want to make long-term for cost savings, right? For energy, as far as energy is concerned. And within the wider context of net zero, you've been on the show to talk about this with us several times. So that fits in, right?
Yes, it fits in and also helps your brand image globally because the whole world is going green. Everybody is going, thinking of climate change, reducing CO2 emissions. So it actually helps you, and generally it helps your books, it helps your costs. You just forget the initial investment with it. The long-term benefits far outweighs that.
You talked about their technology costs feeding into their operational costs, but I guess if we look at their digital revenues, I guess that also rose as well. So does that, I guess, was one feed into the other? If you look at what do you make of their digital revenues rising?
The digital revenue, I think, is a testament to the investments that they have done in this space. We saw digital revenue contribute to about 13% of their gross revenue in the year, right? So when we're seeing also increase in the different sectors, digital lending, digital wealth and everything. And then even when we go to even their results, they finally, last year they completed the integration with ICO pensions, right? And then one of the things that they've been able to do with the new micro pension scheme is also to leverage on technology to reach more people. So FCMB is using technology to reach more people. And then if we talk about come to this year and see what happened with the Naira redesign and the pressure the banks faced. FCMB was, I also use them, not endorsing them, but I could tell, like, from using them, their technology was good. A lot of times their service, you could rely on their service largely or more than better than some other banks. And so it also says how much benefits they are also reaping, or how beneficial the investment in the digital space has been to them.
Let's move to Transcorp real quick. I guess overview as well. Thanks to the deep dive on FCMB. Since what do you make of their Transcorp hotels, particularly? Their overall performance.
Well, I think that they've just reinforced their position as a leader in the hospitality sector, right? They say it's the best result they've had since the inception of the hotel. They are solidly above pre-pandemic level. The revenues grow by 47%. Profit after tax now 2.6%. I think it's just also seeing that they have stuck to their strategic financial management strategy, which they also used last year. They have stuck to it. They focused on driving cost efficiency. They have been largely concentrated on that, and it's still yielding results. They are focused on sweating their assets, also changing, diversifying from using foreign imported goods to foreign goods to locally produce goods to mitigate or reduce the exchange rate volatility and effect on their costs. And generally, we're seeing the results in profit after tax. Also, they had the investment, digital, also went digital in some way with the online bank booking platform. And now that has actually increased the total to they have about 5,000 rooms by ownership and management by that booking platform. And we're seeing the results of this and then the impressive financial management that they have employed with their results.
But a minute ago, their occupancy, what do you make of their average occupancy rates? Right? I mean, this, I guess, is the lifeblood of any hotel, that you want more people staying there. So what do you make of this climb from 2021?
It's showing that business travel has increased, and they also said that it's as a result of the full-fledged return to the international business travel, and also we're seeing increased leisure, customer leisure segment. So that's also increased, and that's feeding into the occupancy ratio, and that's why we're seeing an increase in the occupancy ratio and translating into their revenues.
Mayowa Ige, Senior Associate, Financial Derivatives Company Limited. Always a pleasure doing the deep dives into this sector performance for these publicly traded companies. Thank you so much for joining us. Appreciate your time.